I want you to picture this for a second. Imagine that you use a trading strategy for 6 months and you look in your brokerage account 6 months from now and you see that you've doubled the money that you have, that you've 4x the money, that you've 6x, 10x, 15x, whatever it may be. Well, I'm going to show you the strategy that I'm currently using to 10x the amount of money that I have in my brokerage account and make $100,000 in 6 months. Let's jump into it. Alright, so to first understand the strategy, we gotta understand where we can use it. I'm a futures trader. I trade futures on ES and NQ. They're indexes of the S&P 500 and NASDAQ. This strategy works very good for those. But you don't have to necessarily stick to futures. If you trade options, for example, the strategy should work. Options are a little different, right? They have the Greeks that influence them. But in practice, it should work. If you trade crypto, home run, right? Crypto's a little... there's a lot of volatility there, but it could definitely still work if you trade futures on different things, not just indexes. If you trade commodities or different stocks or XYZ. So with that being said, let me actually show you what the strategy is.
First and foremost, I just want to give a quick shout out to TJR. He's a YouTuber and trader. He really pioneered the strategy. A lot of where the strategy comes from him. Go check him out. But I'll do my best to explain what I actually do and how I use it. So this is a shorter time frame strategy. I'm looking for anywhere from a 10-minute move to a 3-hour move. So I'm only going to be in the market for a little bit in the day. So to basically get to that move, we first got to start at number 1. I'm going to scale into the 4-hour on the candles, and that's going to tell me my bias for the day, whether we're going up, whether we're going down. Then from there, I'll scale into the 1 hour. If the 1 hour aligns with the 4-hour, so if they're both in the same structure, right? If they're both going up or both going down, I'll scale into the 5-minute. If they're not, if they don't agree, I'll scale into the 15-minute. Why I do that, if the 4-hour and the 1 hour are not agreeing and you're trying to look for a long, but you're not really sure if market's going to go long today, you probably want to see the bigger picture first, right? From there, we're going to go into point number 2. You're going to mark out the daily draws on liquidity, the 4-hour draws, the 1-hour draws. I'll go into that in a moment when we look and see some examples, but that is where we'll start. And by marking those draws on liquidity, what we're going to do next is go to number 3. We're going to wait for macro to open. Macro is 20 minutes after market opens. You want to wait a little bit before you just jump into a trade right when market opens, just because there's a lot of manipulation typically that happens in the first 20 minutes. So for me, it's 7:50 on Mountain Time. Market opens at 7:30. But let's say you're on the East Coast, it's going to be 9:50, right? So just figure out where you live when market opens and wait 20 minutes after. You can mark it out on the chart too. I do that, it helps a lot. And then from there, I have my hands on my butt and I'm looking for my high time frame confluences to be hit. And that first starts with my draw on liquidity for the day. When I go into it in the example, I'll show it. But if I'm going to go up, if I think my bias is to go up, I want to see a low get taken out, right? A low draw on liquidity get taken out. My bias is to go down. I want to see a high draw on liquidity taken out. From there, we'll move to point number 4. Once the straw has been hit, we're going to look for a break of structure on the respective time frame. That goes back to that scaling part, right? So if I'm on the 15-minute, I'm going to look for a break of structure there. If I'm on the 5-minute, I'm going to look for a break of structure on that time frame. And we'll go over that in a moment too. Once I get my break of structure, and only once I get my break of structure, confirming order flow is going in the opposite direction now, I'm going to look for a third confluence. This third confluence will be either a 15-minute confluence or a 5-minute confluence, whatever time frame that I'm on. And this could be a fair value gap, order block, breaker block, equilibrium. There's more stuff too, but those are the ones that I mainly use. But I'm gonna wait for price to push into that time frame. And that moves into number 6. Once price is pushed into this time frame, or maybe even a little bit beforehand, I'll scale down one more time. If I'm on the 5-minute time frame, I'll scale to the 1-minute time frame. If I'm on the 15-minute time frame, I'll scale to the 5-minute time frame. So we're just scaling it down, just working it down. So we start at the 4-hour, 1 hour, 15-minute, 5-minute, whatever it may be, and then 5-minute, 1 minute, right? This is where I'm gonna execute. What I'm gonna do
I'm going to go to number 7. I'm going to allow price to push into whatever the confluence is. From there, I'm going to look for a break of structure or a positive candle closure going out of that confluence to basically enter and confirm that this is where price wants to go. When I say positive candle closure, that won't be on the 5 minute or 1 minute. That will be on the time frame above. But if I want to enter in a little earlier, I can wait for a break of structure when price is in that confluence, because it basically is just confirming price is breaking structure, wanting to go in the way that I believe price wants to go. And then 8, we enter. Kind of simple. It's simpler to me the more that I do it. It could still be kind of complex. There's a lot of moving parts, a lot of things to think about, and it's kind of hard too because it doesn't happen every day. There's different ways to use the strategy, more risky ways too, but for my main strategy, this is what I use. You just got to be patient with it, but when it works, it definitely works. Okay, let's jump into some examples on the chart. Starting with when the 4 hour agrees with the 1 hour, look right before market open. This line right here is market open. We see that price is pushing up. We are in bullish structure, right? Bullish is going up. Same deal on the 1 hour. Might look like price is going down, but it never breaks structure. We'll go into what a break of structure is here in a minute. But yeah, again, never break structure. In addition, we marked out some highs and lows. Highs and lows are going to take 2 candles to form. A high is when you get a candle that goes up and goes down, that forms a high. So we have a high right here. A low is when you get a candle that goes down and then goes up. So we got a low right here. From there, we scale into the 5 minute because both the 4 hour, 1 hour agree. So now that we're in the 5 minute, market open is 7:30 right here, and we wait. 7:50 macros opens. Now we're looking for a trade. So price is pushed down here to sweep liquidity. This is what a liquidity sweep is. Okay, sorry guys, had to find the pen. Just looking at this, what a liquidity sweep is when price reverses. I'll quickly show you guys what it is. When price is trending up, sometimes there's a lot of orders above highs, right? Not all the time, but sometimes there is. And again, the higher the time frame, the more power it holds, right? That's why we're marking out 1 hour, 4 hour instead of 5 minute, 1 minute. So we just mark this high right here. Price comes up, past the high, and then reverses, right? That's what we're looking for. That's going down, right? Or if we're going up, we're trending down and then pop up. Same deal below this low, right? So with that in mind, this is what we were looking for on this trade, right? So we had this low that was formed, which is this line. Price kind of comes below it and it reverses off of it. How do we know it reversed? Well, we got to break a structure on the 5 minute time frame. We have a high right here, right? So up, down candle. A break of structure is when a candle body, not a wick, breaks above it, right? Break structure. We're in a new structure now. We're not in bearish structure anymore. We're in bullish. So this red line is the top of this candle, right? So this first candle that pushes up, when the wick pushes up above it, it's not a break of structure. But the next candle, when the body pushes above it and closes above it, you have to have a close. That's a break of structure. So from there, what do we have so far? So we scaled from the 4 hour to the 1 hour. We got our liquidity sweep on the 1 hour. So we're in the 5 minute time frame. So we scaled down there. We see that price broke structure. So now what do? We're gonna mark some confluences. I marked a fair value gap, which again, I won't really go over that right now, but that's a confluence that I use. You could probably use, I would assume you could use equilibrium too. You can use equilibrium too on this trade. So from there, we'll mark our confluences. Again, we're still waiting, so we're gonna scale into the 1 minute. We're gonna wait for price to push into this confluence, right? So we broke structure right here, price went up, came down, all the way down here. It pushed into our confluence, right? So we got equilibrium, we got fair value gap, right? All the confluences in the world. There's probably more too, but those are just a few that I marked. Now from there, we're waiting for a reversal out of those confluences. So price to push out of those confluences. You can either do it with a candle body closure. So that would be if, in our case, the 5 minute body closed above this confluence, or a 1 minute break of structure. Now this is where this trade gets a little complex. I used a break of structure on the Fibonacci. Again, TJR explains this perfectly. I believe in his order flow video. I would go check it out. But essentially, if price pushes so far up, it's as good as a break of structure, right? We also do get a break of structure like right here. That's where I entered, right? Our next step is to enter. Put my stop loss below the low. You can put it below the fair value gap. You can put it equilibrium for this move. You can put it wherever. You could even have entered up here off this break of structure. But from there, what does price do? So we marked out daily draws on liquidity to the downside, right? Our daily lows. We also marked our daily highs. So where does price go? If goes right to those highs. Why is there take profit at the highs? Because that's where price will most likely reverse. That's when I want to be out of the market. And the way that I would have protected this trade, we never got stopped out. But again, the strategy is super sound. Let's now jump into a trade where the 4 hour and the 1 hour disagree. So starting before market open, which is this line, we can see that price is in bearish structure. We broke structure right here because this candle opened below. It's going down, right? We marked out a high over here. That'll be important later. I'll get back to that one. But there's plenty of other highs that we can mark out. A lot of resting liquidity in that area. Pop into the 1 hour. Price is obviously trending up. There's no break of structure to the downside. And we have a low right here. We can mark down these two, but this is one of them. From there, we're going to scale into the 15-minute. Price goes to this low, to this strong liquidity. It reverses from there. We get our break of structure. And then from there, we're kind of just looking for a confluence. Really would have loved to see a confluence down here, but there really wasn't any. There's a fair value gap right here. You can scale into the 5-minute. So price pushes into it, and then we break structure right here. And we enter off of that. You can put that all the way at the high up there. It goes a lot higher up too, so there's more take profit opportunity, right? All right, so now we know when to use the strategy, what time frame it works on, when to scale in. There's a lot of different confluences. It can be kind of crazy. Again, I would recommend going to go watch TJR's strategy videos. But if you want to see more of this type of stuff, yeah, I could definitely explain the confluences, why I enter when I enter, that type of deal. And I do that on a daily basis. Whenever I take a trade, I'll post it on my Instagram and on my YouTube. They're both at RealChanTrades. If you're watching this right now, you already know about the YouTube, but the Instagram at RealChanTrades. Go check both of those out for more trading content like this. If you guys enjoyed the video, like, subscribe, do all that fun stuff, and have a good day. I'll see you guys in the next one. Peace.